Good morning, traders, and good morning to the registered investment advisors out there, because this edition of Trade Talks is for you. I'm Jill Malandrino, global markets reporter at Nasdaq, and joining me is Kate Healy of GenNext at TD Ameritrade Institutional. Kate, I hear this is a new position over at TD, so tell me about that.
It is, Jill. It's really exciting. We've decided that, there's such a shortage of advisors in this industry, and not everyone's paying attention to that enough. So we thought it was important enough that we would create an executive level position just purely dedicated to making sure advisors are finding the right next generation talent, and that we're bringing in diverse talent into this industry. We've got a shortage of women, we have a shortage of diversity. So what can we do at TD Ameritrade to help advisors really help find that talent, help nurture that talent, and retain that talent at their firms?
Well, tell us about NextGen RIA scholarships and grants.
Well, one of the ways that we do that is we've reached out this is our 5th year of awarding scholarships to financial planning students. 2 of the scholarships are geared towards diverse student populations, so women, minorities, and 10 of them are, just regular scholarships. We also offer 2 grants. So we have an emerging program grant of $25,000 to a university and a $50,000 grant to an established program, so that these programs can make sure that they are creating programs to help create the next generation of talent and teaching them the kinds of skills, especially that they don't always learn in some of the classes, like communication, relating to clients, more than just the technical skills that they're learning.
Right, that's an interesting point. So what are some of the findings that the latest survey on registered investment advisors and the usage of interns, how is this playing out?
Yeah, RIAs don't use interns as much as they should. So only about 1/3 of advisors are using interns. Most of them are using them during the school year, actually, which we thought was a little weird. 70% of those that use them are actually using them throughout the year, and they use them to do projects that they don't have time for. They help with, systems integrations. They also are great for helping with setting up social media programs. But I think that RIAs really need to pay attention, because when you look at the rest of the population, broker-dealer population, national broker-dealers, 2/3 of those are hiring interns. And if the RIAs aren't getting out in front of this and hiring from those schools the best interns early in the year, they're losing out on an ability to build up their pipeline of talent and potentially look for succession in their industry.
I find it really interesting that they're using it for social media, because the interns that we have at Nasdaq, they have completely revolutionized certain platforms for us because they grew up with it.
Absolutely. They're so comfortable with social media. It's just something that they do. So they bring this whole talent level. And from an RIA perspective, right, we're helping people with financial planning, but it's so much about the human element, and social media just brings that to life in such a great way that I think that the next gen advisors are really key to that success.
I also think it's good for the interns as well, because they're getting experience with someone who have had more human level experience, like old school RIA, if you will.
Exactly. We always tell the advisors, don't put the intern in charge of your entire social media program, because you've still got to look at your strategy, but definitely use them to look at the content and the places and platforms that you should be on, because they know where the cutting edge is.
All right. Well, thank you very much, Kate, for joining us.
Thank you.
And thank you, as always, traders and registered investment advisors, for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.